Well, folks, today's one of those days when you look at the markets and you're like, oh my gosh, this is awful, okay? Just pure awful. Dow's getting absolutely decimated today. NASDAQ down over 4% today. This is just awful. S&P 500 now is officially back into bear market territory. As of today, Russell getting obliterated. Now down another 4% plus today. I mean, you just look out there, you open your app, and it's like, seriously, like this is going on? You know, never mind the whole situation that's going on in crypto. I'll probably have to cover that in a separate video today because there's a lot going on with crypto that's a mess right now, okay? You know, NASDAQ's now down well over 31% year to date. And boy, do we have a lot to get into in this video that I have to show you guys. Because some of these moves are extraordinary we're seeing out there. There's some commentary I see that's very important for everybody to understand what's going on beneath the surface right now in the stock market and things like that, okay? NVIDIA now down 47% year to date, 47%. Many of these stocks now are reaching multi-year lows. And some of these stocks are even starting to reach, you know, you have to go back to prior to Rona for some of these stocks, like 3 years back, 4 years back, 5 years back, 6 years back, in terms of how much their stock prices are dropping. You're having to go back to like pricing you saw in like 2017 for some of these stocks now. Tesla, is now down 45.5% year to date. That stock just cannot find a bottom anywhere right now. Shopify stock, almost 77% year to date. Almost 77% year to date, guys, for Shopify. These are brand name companies. These are some of the biggest companies in the world, right? That I'm showing you. These aren't some mid caps or small cap stocks or something like that. These are some of the most brand name recognizable stocks in the whole world. You're just seeing it's devastation, right? Netflix stock now down over 71% year to date. This is at like 2017, 2016 type levels for Netflix stock now at this point in time, right? PayPal is now down 61.6% year to date and at new fresh multi-year lows. It's just devastation on devastation, with Meta now down over 50%. This is one of the biggest companies in the world you're looking at right in front of you, is down over 50% year to date. I mean, you know, you can't make this stuff up. Just incredible moves. Now, in even a crashing market, you got to have some you know, you got to be able to laugh a little bit, okay? And I got a couple funny things to show you guys before we get back into the serious stuff, okay? The Fed needs to raise rates as quickly as possible to tame inflation by sending us into a recession, where they can then cut rates to save us from the recession. That's like taking 5 shots at the bar, then driving 90 miles per hour home to get home before you're drunk. Oh man. Oh, you know, you got to have a sense of humor even in a crashing market, okay? Inflation, central banks, Putin did it. Oh man, you know, you got to have a sense of humor even in a crashing market. You got to have a sense of humor, okay? Now, what takes away my sense of humor is when I see things like this. Morgan Stanley CEO sees 50-50 odds of a recession ahead. Come on, man. Come on. Like, you know, 50-50, I feel like everybody should be at like 95.5 right now, okay? Like the 5% is we pull off a miracle here and we don't go into recession. I think it's a high probability we're already technically in a recession right now. But come on, man, 50-50, this really, so two things. One, I like that they're getting closer to believing we're going to have a recession. But on the flip side, I'm like 50-50. Like really, I think it should be like 95% probability we're in a recession or going to have a recession here. In like 5%, like is a miracle and somehow we don't go into recession or something like that. But the fact that, you know, some of these folks at some of these big banks, investment banks, things like that, are at 50-50. Oh, come on, man. Come on. Like, you know, wake up and smell the coffee, right? It's possible we go into recession, obviously, probably 50-50 odds now, Gorman said Monday at a financial conference held by New York-based bank. That's up from his earlier 30% recession risk estimate, okay? So, you know, he's going in the right direction, but still, man, 50-50, come on, man. I don't think we're falling into some massive hole over the next few years. I think eventually the Fed will get a hold of inflation. Yeah, eventually it will happen. Yes, I agree with that. You know that it's going to be bumpy. People's 401ks are going to be down this year, he says. And yeah, you know, it looks like a pretty darn good prediction, I would say, because yeah, there's nothing really coming to save the day here in the short term. So yeah, it's rough, right? And we got a lot further to fall in the S&P and the Dow likely. A lot of these big dogs that have been holding up decent are still going to fall more. Safety stocks are continuing to fall right now. And on top of that, oil and gas is, you know, will is in a peaking phase, whether it peaks right now or next month or the month after or something like that. We don't know, but it will peak. And then oil and gas stocks will start coming down heavy. And, then commodities is going to be the next thing that will start falling. And a lot of the basic materials type companies will be the next thing to fall. Like I said, when you're going through an epic crash, by the time you're done, everything's been hit. Oil, gas, the safest of the safe stocks out there, everything's been hit by the end of it. Basic material companies, when you're at the end of a crash, everything will have gotten hit, and that's exactly where we're going, essentially, okay? 10-year Treasury just moved up to above 3.35. So here's a way to think about the 10-year Treasury, okay? And this is very important for everybody watching this, so everybody understands exactly, 10-year Treasury, okay? If the 10-year Treasury spikes higher, what that essentially means is the Nasdaq's going lower, okay? Think of it like that. And if the 10-year Treasury spikes down, the Nasdaq's likely going up. That's just like, I've watched this correlation play out for quite some time now. And essentially, if the 10-year moves up huge, it's bad for growth stocks. It's bad for tech stocks. It's bad for the Nasdaq. If the 10-year spikes down, that's good. Like if all of a sudden magically tomorrow the 10-year went to 2.3%, which is not happening, but let's just say it happened, the Nasdaq would go on one of the most insane rallies you've ever seen. Growth stocks would go on an insane rally. Everything would just be ridiculous in the market. That's likely not happening, but just something to keep in mind, okay? So remember that moving forward, that's just usually how it plays out. 10-year spikes higher, Nasdaq moves lower. And the inverse is also something that happens. So, that's a whole situation there. If we look at some of this devastation out here, right? And look at the travel stocks here today. CCL now is under $10 again. CCL under 10. Who ever thought we'd see CCL again under 10, right? Everybody could kind of understand that during the Rona crash, but, that's not going on anymore, right? And so, like, the fact that that's at, below 10 now is just crazy to see that, right? The airlines are all just doing horrible. United Airlines down almost 10% today. American Airlines down huge. Royal Caribbean's down huge. MGM Properties down almost 9% here today. Airbnb down 8.5% here today. Hawaiian Holdings down 8%. Oobity booba down almost 8% here today. Come on, man. Like, seriously? Wynn's down 7%. Delta's down 7%. And Love's down 5.5%. Travel's just getting, wrecked. The thing with these stocks is that they're already almost all of them are already at 52-week lows. So they just push new 52-week low after new 52-week low after new 52-week low. And outside of the Rona crash in March and April of 2020, these stocks are at the lowest prices you can see in like the last 5 to 10 years. The last 5 to 10 years, these companies. And, there's no buying pressure on the side for travel stocks right now. No one wants to play travel stocks. They're staying as far away from travel stocks as they possibly can. And it's almost insane to see that, right? Housing stocks are really getting hit today, as they should, to be quite honest. And I think they got a lot more hitting to go. Century Communities, which is a big home builder, down 10.5% here today. Rocket down another 9% here today. At $7. I don't own Rocket stock personally, RKT. I might own it down the road. It might be one of those 2023 buys for me. Let's say it keeps getting devastated. I might want to step in. But, Rocket has been one I've stayed away from despite it being an insanely low PE. And the reason being essentially when it comes to Rocket is refinancing's done for at least this year, and probably into 23. Refinancing starts coming back, in my opinion, probably back half of 23 or 24 as they lower interest rates, okay? The mortgage market is going to be messy, in my opinion, for the next 12 to 24 months. I don't think there's going to be a ton of home sales. Basically, from this summer all the way through next summer and maybe even into that, fall time into the future, essentially. And so I don't think the housing market's going to be in a good place for quite some time. And if the housing market's not in a good place for quite some time, mortgages, refinancing, things like that, it's not good for Rocket's business model, okay? It's not good at all. You look at a stock like Lennar down 6% today, Toll Brothers down almost 7%, RH. As far as RH, when am I looking to buy RH stock? Because I actually do really like that company. That's probably another one I'm lining up for a 2023 buy, assuming housing continues to kind of get devastated in the next 6 months or so. I could see myself in 2023 at some point buying RH. Maybe that stock's $100 something at that time. We'll see what happens. Maybe it's lower, maybe it's higher. We'll see. But, yeah, I don't need to run out and go buy RH right now. That's one of those stocks that obviously, super premium furniture and very, very, very expensive. That's the type of stuff that people are going to cut back on. And even the wealthy for the next probably 6 to 12 months are going to cut back on a lot of new real estate purchases and things like that, which is not good for RH's business model. And the reason the wealthy cut back is not because they don't have the money to do it. It's just they understand the game of, I could buy something way cheaper in 6 to 12 months. Why would I buy it right now? They didn't get all that money for nothing, right? And they usually have good advisors if they don't know what they're doing. And so if you let's say you're a high net worth individual, why go buy a property right now when you could buy it for far cheaper 6 months from now, 12 months from now, or 18 months from now, right? And so that's just kind of devastating for RH's business model, in my opinion, for the next, 12 to 18 months. We'll see what happens with their numbers, but I think they're just going to continue to kind of weaken for the next, several quarters, unfortunately. So housing stocks are a hot mess, right? Fintech, this is crazy. PayPal, we already talked about that one. Hood, I'm going to talk about Hood at the end of this video. We're going to cap off this video talking about Hood specifically because there's something absolutely ridiculous I have to show you in regards to Hood here today, okay? SoFi is back into the fives now. I mean, SoFi, I listened to their last conference call. It was so dang good, I can't even explain it. Their credit quality, the types of customers they have for their products and things like that, the average credit score, the average net worth, the annual income, things like that. I mean, it was amazing. I mean, to be quite honest, it was an amazing conference call. It doesn't matter in this market. The stock is back to the fives again, and as long as this market's risk off, this stock will be in the fives, fours, threes. It's just the way it is. Despite to be quite honest. Really impressive numbers out of this company and an absolutely amazing conference call. It doesn't matter though. Upstart down 10% here today. Look at Square stock, SQ. That one's approaching multi-year lows once again. Coin, might be in the 40s if Bitcoin and Ethereum keep tanking here. Affirm is at a new pretty much all-time low in the 17s here today. That's a direct play on buy now, pay later, and just continues to be devastated. My favorite play out of all fintech is PayPal. And the reason PayPal is my favorite play in all of fintech is I think it has the best risk-reward profile in terms of holding up the best, which is obviously true on a day like today. But also I think it has just as big an upside as many of these other stocks out there. So that's why I personally prefer PayPal, and they actually are a moneymaker where some of these other companies are money losers, okay? And diversified because they not only own PayPal, they also own Venmo, whereas a lot of these other companies are just one-trick ponies. That's why I love PayPal specifically, okay? Now, Cathie Wood, yeah, it's ugly. ARK Fund at a new multi-year low again here today. TARK down 16%. Look at TARK now, 15. TARK, oh boy. Maybe they launched it at the wrong time, or maybe they were launched at the right time. We'll have to see what happens with that. But obviously, just all the Cathie Wood stocks are just, being devastated. It's in a risk-off market. There's just no way. There's no way her stocks are going to perform well in a risk-off market. That's just a bottom line. It's just not happening. So, it's just unfortunate, and that is what it is, right? Lumber, my favorite thing to keep an eye on. 52% now down year to date, making another massive downward move to 524. Pretty soon they're going to pay you to get lumber. Literally you'll be able to go to, somewhere and get lumber for free or something like that. Oh my gosh, man. Incredible. And, there's been a huge bull run in commodities for quite some time now, for the last, let's call it 12 to 18 months. And depending upon the type of commodity, they've went at different runs at different times. That bull run is starting to end in some of the commodities that went first. And basically it's going to play out very similar to how the stock market plays out in terms of phases. This starts getting hit, and then this starts getting hit, and this starts getting hit. And you're seeing that play out in the commodity market, where lumber was one of the first things that started going beast mode. That was a commodity, and everybody's like, whoa, what is going on here, right? And now it's one of the first that's getting absolutely obliterated and devastated. This is how this is going to play out in the commodity market, where it's just going to be thing after thing after thing starts coming down the commodity market until all the commodities are then devastated, right? That's just the game, man. As far as food commodities, that will be the last thing to fall. You might have to wait till 2023 for that to begin to happen, though. Okay, I pulled up a heat map here. I mean, it's Red Dead Redemption out there. Well, good luck trying to find green out there today. There's not much green. It's just devastation everywhere. And, days like this just kind of show you there's nowhere to hide sometimes in the market. Yeah, there might be some stocks, some stocks hold up better than others, but many times there's just nowhere to hide, man. Look at Apple here today, look at Microsoft here today. It's just nowhere to hide. It's just devastation out there. By the way, I see MCD is green here today. I got a crazy story to tell you guys in regards to McDonald's. I don't know if you guys have heard this, but McDonald's pulled out of Russia, right? So McDonald's pulls out of Russia, and it's like, oh yeah, show Russia, show Putin, we're gonna pull out our McDonald's out of Russia, right? Well, all those locations basically, franchise bottom, okay? Now, they changed the branding from McDonald's to something else, essentially, okay? And basically, they're serving literally the same exact food that they used to serve at the McDonald's, which makes sense because all those suppliers are from Russia. So it's the same exact food, chicken nuggets and Big Macs and double, quarter pounders and double cheeseburgers and all that stuff, right? And so they open these new McDonald's that aren't McDonald's. They're some Russia name, but it's basically the equivalent of McDonald's, and they're just insanely busy. And so now Russia gets to keep all that money rather than McDonald's used to make that money. So, oh man, can't make this stuff up, man. Can't make this stuff up. Yeah, you gotta show them who's boss, right? Okay, yeah, I don't know how well that played out. Now, a day like today, to be quite frank, is a day when a lot of people get margin called. A lot of people get margin called, not just something on Wall Street that plays out, but also in the retail community. When you see this sort of devastation out there and these stocks sell off, 5, 10 type percentages, right? 15% type moves, and people are already cutting it close with margin calls. A lot of people get forced into margin calls in this sort of market. And, it sucks, but that's why you can't even touch margin, unfortunately, in this sort of market. Is so dang tempting because you're looking at stocks and you're like, oh my gosh, this stock is so discounted and this stock is down so much and this stock's at multi-year lows, a margin, oh, come on. But it's such a game of chicken, you can't even play it, man, because you're running head on into a market that we have no clue, where the bottom is, right? The bottom could be tomorrow, the bottom could be a month from now, the bottom could be 3 months from now, the bottom could be 6 months from now, the bottom could be a year from now. And we have no clue in there, where the true bottom is. And so if you're loading up a margin and there's no conception on when the bottom is, you're just playing an extremely dangerous game. And the next thing you know, you get margin calls, which leads to more people selling off stocks, which leads to more margin calls, which just you get into this unbelievably vicious cycle, which is why you see so many of these stocks down 40, 50, 60, 70, 80%. Year to date, margin calls are definitely a huge part in that. Where people are margined up, they sell off. Now, margin debt's been coming down. I think it honestly needs to come down to the $500 to $600 billion level. We at the peak, we were up to almost a trillion in margin debt at the peak. Right now, we're in the 700s. I think we need to get to the 500s, 600s to be in a more healthy market. Okay. Now, Jay Powell. So, a lot of people are looking and when Superman comes save the day for the stock market. Okay. I think at the very earliest, he can try to do something maybe at the end of this year, but I think you can't really count on that till 2023, to be honest. Because of how bad this latest inflation report was, unfortunately. I don't think the Fed can really do much. Let's just put it that way until, like I said, at the earliest, late this year, but likely it's going to be 2023. And so basically you have about a 6 to 18 month window here where you can just add assets at extremely discounted prices, because of just kind of the devastation in the market before things really start to roar again. But, we'll see how it all plays out. I just, it's hard to see him saving the day because the inflation rate came in so bad this last report, essentially. Okay. Now, I want to close out this video with something insane. Robinhood today is trading at about a $6 billion market cap. And at some point, it was actually under $5 billion, actually under $6 billion. So it was in the fives. Okay. Robinhood has cash on their balance sheet of about $6 billion. So here you're basically buying the whole Robinhood company for essentially almost free today because of how much cash they have and what their market cap's at. And I just think this illustrates the point of just no one wants to buy anything right now because it's very rare you ever see a name brand company, which Robinhood's an extremely famous company in the stock market because it's a dang stock brokerage, okay? And it's very rare you ever get to see a company that is as famous as Robinhood is, that's trading at a market cap that is less less than the amount of cash the company has on the balance sheet. It would be like, you trying to sell your house and saying, I'm going to sell my house for $1 million, but there's actually $1.2 million of cash buried in the backyard. It's like, oh, wow, okay, cool. So I basically getting the house for free, essentially. And that's essentially what's happening with Robinhood. You're basically getting the whole company for free right now. And that's, remember they used to do the free stock promo or whatever? Now you get a company for free, the whole dang thing, okay? But that's the sort of market we're in right now. That folks don't want to take any risk, and like, that's money losing company. We don't want any part of it right now. And we'll see how much longer that market lasts, but that is the market we're in right now. And even the darlings of Wall Street have come crashing down. And it's ugly out there, guys. I'm going to try to keep you up to date with everything that's going on. I appreciate you guys joining me. As always, there's a lot of developing stuff, so more videos are likely coming. Much love and have a great day.